I just want you to expand on this approach. You said in today's market, you're happy to get even hunt a stock which gives you a 20% return or a 30% return. Now, how do you think about managing the downside when you're looking at opportunities like that? Because normally for a value investor, purchase price discipline is everything. You get your purchase price so good that, even a mediocre exit will make you money. That's the philosophy with which you work. When you look at 20% upside, how do you think about the downside?
No, we look at the downside. Right? We look at the downside. We would not want to buy a stock with a 20% downside and a 20% upside,
Right.
ideally. We would
Right.
like to buy a stock with a slightly lower downside and a higher upside. And so that is the reason why we end up buying large caps, and those large caps deliver lower upside. This is something which happens. But so that's why the whole art of fund management has become, what shall I say, much more risk management in a way. Because at the end of the day, we are operating in this phase of the cycle where it has become risk management. Whereas if you go back to a year like 2020, the art of equity fund management was look for upsides. From there, today it has become an art of risk management.
Right.
Because we have to think, what is the upside, what is the downside, what can go wrong, what all can go wrong in this stock, how much can it go wrong, how will the management behave if it goes wrong.
Right.
So these kind of things we have to do as an asset management company, and considering we manage large amount of money, we also have to think what will we do if things go wrong. So these are things that we have to continuously grapple with when we are managing public money.
Can you elaborate on this risk-reward approach? And the reason I'm asking you this 20% question is because if you are ultimately risk-adjusted looking for a 20% upside also, what is the downside you can digest? Because normally you would want to keep enough room for downside too, and usually you'll also probably average sometimes if your conviction is very high, etc. But by having a smaller upside, are you able to stomach the downside? That's my question.
In fact, we are able to stomach the downside because we are buying more cautious stocks in this stage of the cycle.
But these days, for every slight disappointment in results or a bad news, either on the upside or downside, stocks react so violently. Then how it doesn't give you much room, right? Like things get discounted so fast.
We have not had a problem actually.
Okay.
We have not had a problem.
That's because in large caps, the moves
because in many of our strategies, if you look at a category like balanced advantage fund, actually, or for example, one of the fund of fund strategies that we have. In all those strategies, what happens, our entire framework itself is buy as the market goes down and sell as the market goes up. So for us, volatility is a friend. So we welcome volatility, and so that way we don't have the stress that people worry about. So frankly, if there is a stock which sees a downside and we like the stock, that gives us an opportunity for us to actually accumulate more. So if we see a 20% upside and it falls 5%, now the revised situation would be we have a 25% upside. That would be a better situation, frankly. And in today's market, if we are more sure of a 10% upside, there are times when we are forced to buy because of the quantum of money we manage.
Right.
If we are more certain of a 10% upside, we may buy a stock with a 10% upside also. And
Right.
contrary to what people think, go and look at the returns in the last 1 year. This obsession that people think that they make too much money, go and look at the returns in the funds in the last 1 year. So actually some of the funds like, some of the asset allocation oriented funds that we have delivered better returns than equity funds because our entire thought process is try to make moderate money.
Right.
And that whole process has resulted in a situation that they have delivered decent experience. In the last 1 year, the market returns haven't been good.
Right. So in terms of your portfolio, are you segregating in terms of core portfolios and have a trading strategy for a section of the fund, or how do you manage it?
In some stocks, we have a core weightage.
Okay.
And we may have an auxiliary weightage depending on where they are, what price they are.
Okay.
So it need not be a core portfolio and a satellite portfolio. In some stocks, you could have a core weightage.
Okay.
And the
Which you
portfolio...
will keep at all times.
And the extra weightage may be based on what price the stock may be.
Which may be governed by technical factors, range,
Yeah,
and stuff
exactly.
like that also. Okay.
Because can you predict what will happen in tariffs in the next 1 week? No, you don't know what happens at various points of time.
Network 18 decimates Times Internet with over 6 times more unique users on social media. Network 18, the undisputed leader of news networks. Way ahead of the times.